The iShares Russell Midcap Growth ETF (IWP) is a stock exchange-traded fund that aims to track the performance of the Russell Midcap Growth Index. The fund is managed by BlackRock and was first launched in May 2000. The Russell Midcap Growth Index is a market capitalization-weighted index that measures the performance of the mid-cap growth segment of the U.S. equity market. The index is made up of companies that have a market capitalization between $2 billion and $10 billion and have higher growth prospects compared to their peers. One of the main advantages of investing in the IWP ETF is that it provides investors with diversified exposure to the mid-cap growth segment of the U.S. equity market. This is because the ETF holds a basket of stocks, rather than just a single stock. This diversification can help to reduce the overall risk of an investment portfolio. Another advantage of the IWP ETF is its low expense ratio. The expense ratio for the ETF is 0.35%, which is lower than the average expense ratio for actively managed mutual funds. This means that investors are able to keep more of their investment returns, rather than paying high fees to fund managers. The IWP ETF is also highly liquid, which means that it is easy to buy and sell shares of the ETF on the stock market. This is important for investors who may need to quickly buy or sell shares of the ETF due to changes in their investment strategy or personal circumstances. The ETF has a relatively good performance. It has a returns of 15.31% in the past 5 years. The ETF has also performed well in comparison to other ETFs in the same category, which is a good sign of its consistency. In terms of sector allocation, the ETF is heavily invested in the technology sector, followed by healthcare and consumer discretionary. The top holdings of the ETF include names such as Amazon, Facebook and Adobe Systems Inc. In conclusion, the iShares Russell Midcap Growth ETF (IWP) provides investors with an easy and cost-effective way to gain exposure to the mid-cap growth segment of the U.S. equity market. The ETF has a low expense ratio and is highly liquid, making it an attractive option for both long-term and short-term investors. The ETF has a relatively good performance and a diversified sector allocation, making it a great option for investors looking to add a growth-oriented component to their portfolio.